Hello friends, I am Rashmin Vaja from Ahmedabad. Welcome to short online video series on GST by Bombay Chartered Accountant Society. Today we are going to discuss on the concept of exports under GST and the refunds attached to the exports of goods as well as services. Now, before understanding the refund, we must also understand the definition of export of goods as well as export of services that has been given in IGST Act. As per section 2(5) of IGST Act, export of goods means export of goods with its grammatical variations in cognate expressions. It means that taking the goods out of India to a place outside India. Similarly, the export of service has been defined under section 2(6) of IGST Act, and it has been borrowed from the erstwhile Rule 6 of Service Tax Rules. It means it has four different sub-clauses, 5 different sub-clauses. It says that supplier of the service must be located in India, recipient of the services must be located outside India, and place of supply must be outside India. Apart from that, we also need to check upon the receipt. Receipts must be in foreign convertible exchange. And the last conditions is the supplier of the service and the recipient of the service are not the same, not merely the establishment of the distinct person. So these are the conditions which we must be looking at while going to the export of goods and as well as the services. After looking at definitions of export of goods and services, we are also going to check upon the section 16 that deals with the zero rated supplies. Zero rated supplies includes export of goods as well as services and supplies to SEZ unit or a developer of SEZ. Section 16(2) also says that even though a particular services or goods are exempted as per the notification 12 of the CGST or CGST Act, such goods or services are exported, then also that should not be treated as exempted, but the benefit of ITC must be available, treating it as export of goods or services. Further, to claim the benefit of the export of goods and services, section 16(3) of IGST Act discusses about the process or the procedure that a particular exporter needs to follow. He needs to obtain a bond as well as letter of undertaking. As of now, the process of bond has been discontinued. So letter of undertaking has to be applied online. That is under form RFD 11. And a supplier can do the exports without payment of duty under the letter of undertaking. Apart from that, supplier can also choose to export the goods or services with payment of tax, availing the credits available to it, and claiming the refund of tax that is available to it. There is one recent circular by Central Board of Indirect Tax and Customs, which says that applying for a letter of undertaking is merely a procedure part. So if an exporter does delay in applying for the letter of undertaking, then the substantial benefit of exports must be given, considering the delay in a letter of undertaking as a procedural part, and the benefit of considering the exports must not be taken away from him. Having briefly discussed on the export of goods and services, we'll quickly jump upon the refunds that are available under the GST law. Refunds available can be bifurcated between 3 broad categories: refund of input tax credit, refund of tax paid, GST paid on outward supply, and refund that is available in your electronic cash ledger. Apart from there are other refunds like by mistake you have paid CGST plus SGST instead of IGST. Then you can claim the refund of CGST plus SGST that was wrongly paid because you have to pay IGST again. So that are also the different refunds. So basically, broadly, refunds can be classified into 3 parts: refund of ITC, refund of tax on outward supplies, and refund available excess in your electronic cash ledger. We'll deal with it one by one. Refund of ITC is basically available in zero rated supplies and inverted duty structure. So section 54(3) deals with the refund on ITC. Zero rated supplies we have discussed, but what do we mean by inverted duty structure? Inverted duty structure means the rate of tax on my inputs is more than the rate of tax that is there in my output supplies. So By this mismatch, there would be always a blockage of credit so far as my input tax credit is concerned, and henceforth the government is allowing the refund of ITC under for the supplies under inverted duty structure. Now, having understood the basics of refunds under the Act, the process also needs to be taken care of. Rule 89.5 and Rule 89.4 deals with the refund on zero rated supplies, and Rule 89.5 deals with the refund of inverted duty structure, ITC on inverted duty structure. Now, the process is such that in case of, so refunds can be, refund of ITC can be broadly classified like goods exported with payment of duty, services exported with payment of duty, goods exported without payment of duty, services exported without payment of duty. Apart from that, we also have SEZ supplies on which I can claim ITC refund. So, when we are exporting the goods with payment of duty, they are clearly mentioned that we need to clearly mention in our shipping bill that goods are being exported with payment of duty. So, additionally, we need not do any process for filing of refund, because table 6A wherein the export details is to be fed in GSTR1, form number GSTR1, that would be enough, that would be considered as a refund application. So, in case of goods exported with payment of duty, while I am filling my table A in GSTR1, that would be considered as the refund application, and no additional documents need to be submitted, and refund will be received. Apart from this, all the other refunds like services with payment of duty, ITC on the services without payment of duty, SEZ unit supplies, ITC on SEZ unit supplies, and inverted duty structure, we need to apply the refund under form RFD 01. Along with certain documentations that has been prescribed. Just to understand the formula of the refund applications under various rules or the various categories are, in case of zero rated supply, the refunds would be given by the formula as net input tax credit multiplied by turnover of zero rated supply of goods and as well as services divided by adjusted total turnover. Mind well, in case of zero rated supply services, this formula is given under rule number 89.4, which considers that net input tax credit must have inputs as well as input services. Similarly, going to rule 89.5 for the calculation of refund under inverted duty structure, the formula is such that net input tax credit multiplied by turnover of inverted goods divided by adjusted total turnover minus the tax that is to be paid on the outward supply of such inverted duty structure goods. But the difference in there is a difference in the term of net input tax credit as it is used in 89.4 as compared to 89.5. In case of 89.5, input tax credit means only input goods. So, so government does not want to give the refund of input services used in inverted duty structure. It is restricting up to the input goods only. However, in case of zero rated supplies, input tax credit includes input services as well as input goods. Mind you, when I am claiming the refund of input tax credit, it merely talks about, I mean the formula and all merely talks about the credits or the tax paid on input services as well as input goods. There is no reference to the tax that has been paid on capital goods. So again, the capital goods is not being allowed while you are claiming the refund under input tax credit. However, when I choose to pay tax on my outward supplies, availing the credit office, there is no such restriction. So as differentiating between zero rated supplies with payment of duty, zero rated supplies without payment of duty. In case of without payment of duty, I am claiming the refund of net input tax credit, where is this restriction on inputs as well as only on inputs and as well input services. However, I cannot claim the input tax refund of tax paid on capital goods. But when I am choosing to supply with payment of tax, I can avail the credits of whatever lying with me, whether it's for inputs, capital goods or input services, and I can claim the refund of tax paid on my outward supplies. Now, the process of filing of a refund, as we have understood that in case of exports with payment of duty, Table 6A of GSTR1 would be sufficient, no need for filing of additional form or application with the department. However, for rest of the refund claims, we need to file the refund forms, that is a refund form under form RFD1A. After filing of form RFD1A, within 15 days, we need to, if it's not proper, then within 15 days, the department needs to convey the SSC regarding the deficiency that is found in RFD03. And if it is found proper, within 15 days, they need to give an application reference number, that is ARN number, in form RFD02. After giving RFD02, the department has 7 working days to issue 90% of the provisional refund. So effectively, if the refund application is proper, I must get the 90% of the provisional refund within 21 days, that is 15 days for the issue of ARN and then 7 days for the provisional refund. This provisional refund is to be received in RFD 04, and then if it is found, rest of the documentation and the submissions is found proper, the final order is to be received from RFD from the department under RFD 06. So this was the basically a concept of exports and the refunds attached to the zero rated supplies. Thank you very much.